All right, we're back. I wanted to introduce week four's discussion, what we'll be working on this week. Uh, Again, the way I want to do this is I want to introduce the project that you'll be completing after you've gone through all of the videos in week four. I think this gives us a roadmap of where we're going to be heading. Okay. And so there's three parts to the project. The first part, we're going to conduct some bond analysis. The second part, some stock analysis. The third part, I'm just going to give you a little bit of busy work. I apologize for that, but here we're going to work a couple of problems, and you'll know how to solve these problems once we finish all going through all the videos. Okay. So in the first part, what we're going to do is we're going to use the table on the second page of this project, and we're going to select three bonds that you might be interested in investing. The objective of this part of the project is to write a one-page report justifying your investment decision. Now, what you need to be justifying is you need to discuss the riskiness of the bond. And remember, the riskiness that any bondholder faces is the likelihood of default. Okay, so the only risk that a bondholder, a bond investor faces is if the firm goes bankrupt and can't pay its debt holders, then the debt holders are in trouble. So you're going to have to justify that riskiness. The idea is you want to get as high a yield as possible with it, without having the firm go bankrupt. Okay, so what you might want to do in your analysis is you might want to use ratios that we've discussed previously, liquidity ratios or debt ratios. You did those in project one. You can obtain financial statements from CNBC or from Yahoo Finance. Let me show you how to do that. So I jumped up here on CNBC. I typed in Apple, and Apple populated here. And if you scroll down, you can click on financials, and it will report Apple's most recent balance sheet or income statement. We're going to focus on the balance sheet here. And what you can do is you can calculate liquidity ratios or debt ratios. These are the same ratios that you calculated in project one. How you would do that is you would go ahead and find current assets. Let's say you wanted to calculate the current ratio. Recall that the current ratio is current assets divided by current liabilities. So I'm going to divide 162,819 by current liabilities, which is 105,718, and I'd come up with some answer. You might want to use these ratios to justify your investment decision in project 3. Okay, so if you scroll down here to the second page, you have a number of different bonds that you can invest in. Several of them are investment grade bonds. The others are called junk bonds. I'll describe what those two are in the videos that you'll watch. But you can see here, American Express, you've heard of them, Goldman Sachs, CVS, Microsoft. Here's a bond by Apple, right? So you can look at these firms and get an idea of which bonds you might be willing to invest in. After you watch the videos, you're going to know maybe what to look for in your investment decision. The second part of the project is to conduct a similar analysis. You're going to write another one-page paper that justifies your investment decision. And what you're going to do is you're going to invest in select three individual stocks. Now, I want you to select these stocks from the entire universe of firms, not just the firms who've issued bonds here on the second page. So you are not bound by a list of different firms when you're trying to select three stocks that you'd be interested in investing in. Again, you're going to write this one-page report. You're going to try to justify your decision. Again, you want to acknowledge the risks associated with your decision, and you might also want, both in your stock analysis and your bond analysis, to discuss the current macroeconomic environment. You might also want to talk about industry analysis. These are things that you've discussed in your previous project. So don't lose sight of what we're trying to do. We're trying to get an idea of what's happening in the macroeconomy, and right now it's crazy. Right, we've got a whole bunch of interesting things going on, new changes in fiscal policy, new changes in monetary policy, and these things should help you justify, or at least thinking about these things should help you justify your investment decision. So you'll want to talk about the macroeconomic environment and how that affects your decision, the industry analysis and how that affects your decision, what industries are going to do well in the environment that we are currently operating in. And in stock analysis, you'll also want to examine certain ratios, maybe profitability ratios or efficiency ratios that we've discussed in class. So anyway, what I want you to do is I want Project 3 to build upon the things that you've done in Project 1 and 2. And the objective, again, is to write a one-page report talking about the bonds you'd be willing to invest in, and another one-page report talking about the stocks you'd be willing to invest in. The last part of the project is I want you to answer these 6 questions, okay? These 6 questions, in these 6 questions, what you're going to be doing is finding the price of different bonds or the yields to maturity of different bonds. You might not even have never even heard of these words. You'll learn these in the various videos that we've done. And I've worked a bunch of problems like these that will help you go about solving problems 1 through 6. You'll see problems 1 through 3 are about bonds, problems 4 through 6 are about stocks. The objective here is to find the price of a stock. Now let me explain something here. So let's just look at question 6. So this particular stock, again, I just made this stuff up. They have a unique dividend policy. They're going to pay a dividend of $1.50 next year, $2.10 the next year after that, and in year 3 the dividend will increase to $2.50. After year 3 the dividend is going to grow at a constant rate of 3%, and you're trying to find the current stock price. So in the videos that you'll watch, you're going to come up with a stock pricing formula, all right? And if you believe that model, so if you believe the price that your model is telling you, then what would happen is you would go to your Fidelity account, or you could jump on here to CNBC, and let's say you calculated using our model, you calculated Microsoft's stock price at 171. Okay, so if you calculated Microsoft's stock price at 171, and right now it's trading at 158.83, actually after hours it's trading at 152.51. Then you would be willing to buy this stock because you think that the market has undervalued the stock relative to the model that we've used. Okay, so don't lose sight of what we're doing here in these problems. We're going to try to find the price of bonds and the price of stocks, and then we're going to try to make investment decisions based on those prices to the extent that you believe that those prices from the models that we're going to use are correct. Okay. That's going to cover Project 3. Again, Project 3 will be due 1 week from Wednesday, and so this will tell you this will give you maybe a good introduction into bond analysis and stock analysis.